The tax proposal is to invest back in two critical areas: exploration and secondly infrastructure. I mean, this is a package that deals with some of the constraints on the mining industry, and then more broadly, of course, education and training to deal with the skill shortages. This is a total whole of economy, whole of mining sector approach to build a stronger mining sector.
As the government flagged at the time, there's already been a lot of robust debate about this tax, in particular about this threshold of the 10-year Commonwealth bond. Now, can you really look a miner in the eye and say, we consider that a sufficient threshold at which to consider your profits super?
Well, it's a excess profit over and above what is a rate of return deemed to be the long-term bond rate, I think currently 6%. But the government's made it clear that's a fundamental piece of design architecture. There are other transitional issues that are currently being negotiated, but the government's made it clear that's a fundamental part of this package.
The miners I've spoken to, though, say that any profit that was the 10-year Commonwealth bond would be anemic. In fact, most projects would never get off the ground if that was the threshold that they were to meet.
It's scaremongering, some of this and some of these claims. We saw this when the petroleum and gas industry had a profits tax applied. We saw this then. It was all doom and gloom.
But there's +5% though on top of that return rate though. I mean, it's a much easier threshold to deal with.
It was all doom and gloom. There'll be no oil and gas industry. It'll cease to exist. Today it's bigger and better. It's bigger and better. Now you do expect a bit of argy-bargy, and you do expect some claims to be made by some sectors of the industry that are somewhat exaggerated. And this is good, strong policy for Australia. It's fair policy. It shares some of the returns on a resource that is owned by all the Australian people, for the benefit of all the Australian people, and we're unapologetic about this approach.
I have spoken to some miners, though, that are concerned that perhaps their overseas operations could be taxed in the end with this 40% tax. Can you say that that's never going to happen?
Well, I don't believe so. I'm sure we can't apply tax on an overseas operation. It's the national, the tax responsibilities of that country for that operation in the overseas jurisdiction. And if they have any concerns about that, I'm sure the transitional consultations will deal with it.
So if overseas operations aren't taxable, wouldn't that then send a lot of the investment overseas rather than here to our resources in Australia?
But as I've said, Australia can only tax in its jurisdiction. It can't tax on an operation in another country. That's another country's jurisdiction. And if there are any concerns about that, of course, they should consult with Treasury. But Australian government can only confine tax to Australian mining operations and within our borders.
Would you acknowledge, though, that the profit tax could send some overseas so they have to avoid paying that 40% tax?
Well, that's a separate issue from the one you just asked me about, applying the tax to a mining company that has operations in Ghana or wherever. But we're very confident that as a result of this reform, the mining industry will be bigger, better, employing more people, just as the oil and gas industry is bigger and better, employing more people after the profits tax was introduced there.